I don't want to get into the hysteria that's impacted Wall Street over the past few days, but listen, is this pullback just a normal routine pullback, or is it something more? I got some perspective coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so I got to weigh in on the market volatility that we've seen recently because it's very sudden and it's gotten a lot of attention. And even just walking through the office, I've had colleagues say, "Hey, are you going to talk about the new COVID variant and what it's doing to the market?" And said, "Nah, I think it'll blow over." And sure enough, yesterday, on Wednesday, another rough day in the market. In fact, went from starting the day really positive in the market to dropping and finishing the day down almost 2%, and that's on the heels of some other pretty bad days as well. So got to talk about this. Is this a normal sort of occurrence, or should we start worrying? Okay, to me, it's not reason. There's not reason yet to overreact and get too concerned here, and I'm gonna tell you why. There is a reason to be cautious, though, and let me share just a few. I don't want to throw too much at you, but these are the things that I'm watching that give me some reason for caution. Okay, number one here, market. The Dow Jones is now down over the past 6 months. Okay, but what that speaks to is we've dipped below the 200-day moving average. That's geek speak. That's technical. But if you're averaging the last 200 days. As long as the markets are above that, then that's a positive sign. If the market dips below that, that could be a negative sign, and we've dipped below that temporarily. We did that again back in September when we had a little choppy time period in the markets this year, but that's not necessarily a good sign. Is that a reason to be overly concerned? No, it's not, but it's something that stood out to me. Second thing that's really standing out to me a lot is market breadth, and we've had some challenges with that earlier in the year as well. In fact, our momentum strategy is actively trying to pick winners or what's been winning, and so it's riding momentum, riding waves in the market, and we've seen that turn very quickly early in the spring, and we're seeing that turn very quickly again right now, making some really challenging time periods for momentum trading. But I'm not going to show you this chart. I haven't fact-checked it, but I saw in an individual tweet that 486 of the 500 S&P 500 companies are down 25% over the past 30 days. That seems extreme to me, but I did see that. Haven't fact-checked it, but it seems extreme. What's more pointing of market breadth is take a look at the NASDAQ, okay? Take a look at this tweet right here. While the NASDAQ is just off of its all-time high by a couple percent, and it contains the juggernauts of Apple, Microsoft, Google, some of these big companies that really carry the index at times, 66% of all companies on the NASDAQ are in a bear market, meaning they're down 20%. 35% of the NASDAQ is down 50% from their all-time highs. And you probably know them, Zoom, Peloton. I mean, some of these big companies that were winners last year that you'd be foolish if you didn't hold them last year have absolutely been atrocious this year. And recently, as breadth has deteriorated again, meaning the index might be performing one way, but the average stock within that index or the typical stock within the index is performing much worse. That's market breadth, and we've seen it struggle throughout this year. And in October and in November, it was improving significantly, and now it's just deteriorated again. So that has me a bit cautious as well. Additionally, small cap stocks tend to lead the way in rebounds, but they also tend to lead the way in drops and declines. So it would be a risk premium, some investors call that. And yeah, small caps over the long term have significantly outperformed large caps. Is that different this time? I'm not going to speculate on that, but over history, it does perform better. They do perform better. They tend to perform better in rebound, but they tend to perform worse during these corrections. And take a look at these charts. Through the midpoint of the week, small caps have underperformed large caps 12 days in a row. Guys, that's never happened Never happened. This is the fourth fastest correction in small cap Russell 2000 history. When those come from all-time highs, the last time that these corrections have come this quickly from all-time highs, March of 2000. August of 2007 and 2010 as well. Not good company there. So is that reason to panic? No, but it's catching my attention. It's making me a little cautious. To me, I think what tips the scales between being cautious as I am right now and being concerned is really what the Fed does, not the new variant, because they at least, from what I can see, the doctors and medical professionals that have discovered the new variant said, listen, while it potentially is more contagious and fast spreading, it's not producing severe illness just yet. And so it seems as though I read an article from the doctor that first discovered the variant, and she said the reaction by Great Britain and others to close borders seems extreme to her. So I just, at this time, hoping in that. To me, what would flip me from being cautious to concerned is Fed response. And I think that this pullback in the market has more to do with Fed response than with the new variant. And the Fed response from Jerome Powell, whether this is connected to, well, he's been sort of reappointed and his tenure will extend, so now he doesn't care, throwing caution to the wind, I don't know. But his now hawkish, as they call it, hawkish remarks of, listen, we're going to have to accelerate these the tapering even faster, and some concerns that he's said about inflation finally, right? I've done plenty of videos about how I don't think inflation's transitory. I think it actually is a problem. And the Fed chairman has been much more strong that, yeah, we're going to retire the word transitory. Inflation is a problem we've got to address and attack. I think that's what's caused the market to react this way. But at this point, still cautious, not concerned. Here's a couple reasons why. Last trading day in November 30th, 95% of stocks were in decline. When that happens, take a look at this. Over the past 10 years, happened 19 times. The index was higher 20 days later in each of those situations. To me, that suggests normal pullback, normal sort of correction. But this is my favorite chart. And I point this out to clients all the time, and I'd point it out to you again. Now, this chart is a little noisy, okay? But it shows each year the bars are where the actual S&P 500 actually performed for that year. But that red dot for each year is the actual drawdown from a peak, from a high point to a low point. What was the pain? What was the greatest drop during the year by that index? And you can see it's all over the board, but the average drop per year is 14%. That's normal. That's normal. This year, it's only been a 5% drop. And yes, extreme from last Friday to what's happened earlier this week. Yes, extreme, but still, guys, 5%, okay? It's not an enormous, we haven't even hit average or normal drawdowns just yet. So if the Fed remains hawkish, if they make a policy mistake, that's what would flip me from being cautious to being concerned. We're not there just yet, but those are the things that I'm watching. Work with your CFP, make sure that you've got the right investment strategy, right overall financial structure for whatever comes next, whether this does turn around, Santa rally returns, or if this gets from a little caution to concerning. Work with your CFP on that. If you don't have a CFP on your team, you can always contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.